Joining us now to discuss is Bobby Zagotta, CEO of Bitstamp US. Welcome to the show, Bobby. So we certainly see that it is a risk-off market right now, a sea of red across global equities as well as the crypto markets, and that's having an impact on Bitcoin.
Yes, thanks for having me, Christina. No question that this recent news out of China, combined with the Fed meeting and other kind of uncertainty in the marketplace, is matriculating through into the crypto market.
Do you see this as purely short-term, or are there some systemic risks with what is happening in China, regulation, central banks?
I think it is short-term. I think a lot of the volatility we're experiencing now is expected, but the macro trend you described a moment ago is going to hold on for the next several quarters. So we still have a lot of runway ahead of us in terms of price expansion and elevation over the next couple of quarters anyway.
Nevertheless, often some investors describe Bitcoin as a hedge against inflation, against regular market moves. But do you see that Bitcoin is actually very much tied to the markets?
Well, I think it is a valid hedge against inflation. Because when you think about absolute monetary policy and the fact that Bitcoin and other cryptocurrencies don't have a lot of the same constraints and basically factors or levers attached to them. So that's critically important. I do think that in kind of macro global economic trends, such as a sell-off on the equities markets, that type of uncertainty does matriculate, as I say, through crypto, but I wouldn't go so far to say that the crypto markets and the equity markets are correlated.
Okay. What are your thoughts on stablecoins? Because as we see this trouble grow in Evergrande, there have been questions around whether some stablecoins have Chinese commercial paper backing them, namely Tether, which is the largest stablecoin in the crypto market and the foundation and bridge between the traditional financial markets, government dollars, and the crypto markets. And so is there any, and while Tether has said they do own Chinese commercial paper, it is not in Evergrande. Is there any concern about what is backing these stable coins and how they could shake up the crypto market?
Yes, firstly, let me say that stablecoins play an incredibly important role in the crypto ecosystem, and they create, a lot of efficiencies for many types of, crypto participants, from large institutions to, individual retail investors. So it's really an important kind of cog in the ecosystem to keep things and the ability to move value around, in a semi-frictionless manner. Having said that, I'm not surprised that there's some real questions about the backing of these stable coins, Tether in particular, and hopefully the answers that that the parent can put forth will be adequate for regulators and for customers.
Mm-hmm. Speaking of regulators, in the United States, a lot of regulators like the SEC have been honing in on the crypto markets, so looking at DeFi, saying no to yield products. And so I wonder, as the U.S. regulators and Congress look at the crypto industry and look to create rules and figure out how to make it fit within U.S. laws and regulations, how do you see that panning out?
Firstly, I must say that, at Bitstamp, we're playing the long game here, and we're interested in, continuing global adoption of this really important technology and opportunity for people to manage their value in a kind of a, individual, empowered, sovereign way. But in order for that to happen, it requires good regulation and it requires full engagement on the part of regulators. So we at Bitstamp are fully supportive of additional investment and additional time and effort spent by regulators to get it right. We also are proactively engaging to the extent possible to help them shape the regulation and shape their thinking, frankly, in terms of how to do it in a way that's supportive of consumer protection, but also supportive of, this important technology in the world.
Do you have examples in particular of how you would see that vision coming about?
Yeah, well, I think, like I said, what I am seeing and I'm encouraged by is it's regulators who are engaging differently today than they did 2 or 3 years ago. And 2 or 3 years ago, it was either more of a denial kind of mindset and or a lack of substantive engagement with the industry. What I'm seeing now is more proactive engagement with the industry and openness to conversation and education, frankly. I'm also seeing regulators such as the New York Department of Financial Services and the SEC hiring people from the industry with real crypto or Bitcoin knowledge so that they can build on that foundation of knowledge versus trial and error off of potentially bad assumptions. So I don't have specific examples about actual regulation, but I'm a bit encouraged as to what's possible.